Good afternoon. Thank you so much for joining us for our very first webinar on Keystone Positive Change Investment Trust. I'm Rosie Rankin, a specialist on positive change, and I'm delighted to be joined by the managers of the Trust, Kate Fox and Lee Chan. It's our pleasure today to provide you with an introduction to Keystone Positive Change. First of all, through a 20-minute or so presentation, and then we'll move on to your questions and delve into the detail of trust and some of the companies in which we invest. A sincere thank you to everyone who took the time to submit questions in advance. We will aim to answer as many as possible, and for those we don't have the time to answer today, we will get back to you. So without further ado, let me pass over to Kate to begin the presentation on Keystone Positive Change.
Thank you, Rosie, and good afternoon, everyone. We are delighted to be here today to present to you as the newly appointed managers of the newly named Keystone Positive Change Investment Trust. This is a trust that's undergone radical change and positive change. So radical change in that it's moved from being a UK value-oriented trust to one that is global in perspective and one that is seeking high-quality growth businesses. Positive change in that it is a trust that's now seeking to deliver on not just one, but two objectives on behalf of our shareholders. We seek to deliver attractive investment returns and to help our shareholders contribute towards a more sustainable world for current and future generations through investing in companies whose products and services are providing solutions to global challenges. We believe that these two objectives are complementary, not contradictory, that purpose complements profits. So this afternoon, Lee and I hope to cover the who, the why, and the how of positive change. So who is responsible for the management of the trust? Well, there's a small group of 4 decision makers who are responsible for the decisions. We come with diverse backgrounds, from zoology to history to economics to the environment. We're diverse, but we're united in a sense of purpose of what it is that we're looking to achieve with positive change. So among those 4 decision makers, we have 2 investment managers, myself and Lee, and 2 senior impact analysts, Ed and Michelle, who bring expertise in environmental and social matters. We believe that bringing together these unique yet complementary skill sets will help maximize our chances of success on delivering on those 2 objectives. The 4 decision makers are supported in 3 ways. Firstly, by 3 additional dedicated analysts. That means that we've got 7 people who are working full-time on the positive change strategy. Secondly, we're supported by portfolio advisors who bring expertise, perspective, and ideas from other teams at Baillie Gifford. And thirdly, we're supported by our client specialists, including Rosie, who are dedicated to delivering fantastic client service whilst allowing us the time to find, analyse, and own great businesses over the long term. I'll now hand over to Lee, who's going to explore our philosophy, the why we invest this way.
Great. Thank you very much, Kate. And thank you everyone again for joining us. It's great to be here to talk about Keystone Positive Change. As Kate mentioned, I will start with talking a bit about why we started Positive Change and why we so passionately believe in positive change. So there are 3 reasons. First is that we believe investment is important. I grew up in China in the 1990s and witnessed how a flourishing private and business sector were able to help lift hundreds of millions of people out of poverty and had a tremendously positive impact on society. Fast forward to today, our society is facing a range of challenges, from climate change to the pandemic to growing inequality. And once again, we believe that companies and the private sector have a role to play by coming up with innovations and new products and services that address those challenges. And the investment community can support that by providing patient, long-term capital towards companies to help them achieve their long-term objectives. Second, we believe that companies that are having a positive impact will also prosper and benefit over the long term. They're likely to benefit from growing demands for their products and services because they are making something that's valuable for society, and from more loyal customers and more motivated employees, hence a stronger competitive advantage. So in the long term, we believe that profit and purpose go hand in hand. And finally, we believe that change takes time. Things like climate change and inequality will require years and decades of investment and commitment. This requires a long-term investment horizon. And we believe that Baillie Gifford is a great place to support this style of investment, given our focus on long-term investing. Now, moving on to the positive change philosophy in more detail. So at the heart of our positive change is our dual objective: to deliver attractive long-term investment return, which we define as outperforming the global equity benchmark over rolling 5-year periods, and to have a positive impact on society by supporting companies that are coming up with products and services that are addressing societal challenges. And here, we really want to go beyond the traditional approach to ESG and sustainable investing, which we believe tend to focus too much on ESG risk and not sufficiently on the opportunity that arise from businesses addressing social and environmental challenges. So we're looking forward to solution providers, to businesses that are coming up with innovative products and services that are addressing a social or environmental challenge. We believe this style of investing is a natural extension to what Baillie Gifford has been doing for a long time. In essence, we are looking for companies that are driving positive change, that have a fantastic growth opportunity ahead of them, that then have the strong competitive advantage and committed management team that will help them to capitalize on the opportunity ahead. So what might those companies look like? Just to provide a couple of examples. So in the social inclusion and education scene, one example is a company called Mercado Libre. This is a business in Latin America providing e-commerce and financial services. It's helping small businesses to access a wide range of customers, helping them to grow, reduce the friction in running their business, and as a result, helping them to prosper and create jobs and generate economic growth. Mercado Libre's fintech business also helped to provide financial services from payments to insurance to millions of businesses and individuals. So it's an incredibly powerful platform to drive a more inclusive society. The second area, so in the environment and resource needs, a good example will be Xylem, which makes water pumps, treatment solutions, and filters that go into modern water infrastructure. Xylem's products are critical for providing safe and clean drinking water to millions of people around the world, and also help to collect and treat wastewater before they are returned to nature as well. In the area of healthcare and quality of life, we are to an extent a bit spoiled for choice because there are so many healthcare businesses. But we are looking for really innovative companies that are leveraging on new technologies to address our healthcare challenges. A good example is Moderna, which I'm sure many of you will now know because of its role in the pandemic and producing a vaccine for the coronavirus. But we actually invested in Moderna before the pandemic at its IPO, because we saw the potential of its mRNA technology to develop a new class of therapeutics and vaccines, and that could be incredibly valuable. And then finally, in base of the pyramid, where we are looking for companies addressing the needs of people living on low income, A great example is Safaricom, which is a Kenyan telecom provider, but also the country's leading provider of mobile money services. This has enabled millions of people on low income to access financial services and participate in the real economy. So I hope that provides you with a flavor of the type of really exciting and innovative companies that we believe can drive a positive change in society and generate attractive long-term investment return. Now, moving on to the investment trust in more detail, as Kate said at the start, we recently took on the management of the Keystone Investment Trust. And we are very excited to be working with the board and the shareholders of the trust to deliver on the dual objective for positive change. In particular, we are excited because the investment trust, unlike our open-ended fund, is able to invest in private companies. And we believe this is able to open up our investable universe and allow us to invest in a range of very exciting businesses. It also allows us to provide primary capital directly towards companies, helping them to invest in innovation, recruit people, and scale their business. As a firm, Baillie Gifford has many years of experience investing in private companies, and we have allocated over $5 billion towards over 90 private companies to date. We will be working closely with our private companies team in Baillie Gifford to ensure that we can access exciting opportunities and learn from our colleagues in this very exciting area. Our aim over the next 3 years is to allocate somewhere between 5 to 10% of the trust towards private companies and have a long-term cap at 30%. So we are extremely excited by this new way of investing that the investment trust affords us. And with that, I'll pass back to Kate to talk a bit more about our investment process.
Thank you, Lee. So I believe that what we are doing in channeling capital this way isn't only hugely important, and it's also hugely exciting. It provides a great opportunity for investors. But what we're doing is not easy. So the challenges that we're looking to address are interlinked. There's no such thing as a perfect company, and having the two objectives requires careful management. So we've developed a process to help us overcome these challenges. First of all, we need to be clear in terms of what it is that we're looking for. And for us, it's that sweet spot. So high quality growth companies, which are our natural hunting ground here at Baillie Gifford, that are delivering a positive impact. Now, idea generation is a very organic process. We think it's important to cast the net as wide as possible in trying to identify exciting ideas. So we don't restrict ourselves to any sectors, but instead maintain an open mind. In fact, some of my favorite companies that we own in the portfolio are perhaps not obvious at the onset. Idea generation comes about through meeting companies in our offices or at their headquarters or on Zoom, as is the case currently. Ideas can also come about through meeting interesting people, industry experts, academics. A fascinating journey for us has been our research on sustainable agriculture and the future of food. So there are around 800 million people that are currently undernourished, but at the same time, agriculture has a huge impact on our environment. So it's responsible for around about 20% of carbon emissions, 70% of water consumption, and is the leading contributor to biodiversity loss. Our research here has been a multi-pronged approach. So we've looked at individual companies, we've engaged inquisitive researchers and asked them to delve deeper into what needs to change in the overall system. And we've also embraced academic relationships, for example, that with the James Hutton Institute, which is trying to establish a climate positive farm up near Dundee. Through this multi-year project, we've ended up with 2 new holdings in the portfolio that address this challenge. John Deere, a US business that was established around about 180 years ago, that makes those iconic green tractors that some of you may be familiar with. What really excites us about John Deere is its precision agriculture technology, which is enabling farmers to do more with less. For example, it's got a see and spray technology, which through machine vision and sensors is able to distinguish between what is weed and what is plant, so that the fertilizer is then applied just to the weeds, saving fertilizer consumption by up to 80%. The second company that we've identified in this theme is Beyond Meat, a much younger business that was founded back in 2009. This company makes plant-based protein and is really trying to transform the way we eat our food. So they're trying to make a plant-based protein which isn't just attractive to vegetarians, but also to meat eaters. And I think it's striking that in the supermarkets where customers can buy their products, 90% of them also purchase meat. Once we've identified a potential idea, we then put it through our rigorous analysis process. And there are two stages to this. Firstly, when we dig into the investment opportunity. This fundamental company research is carried out by the investment managers. And here we look to explore the long-term growth opportunities for a business, the competitive dynamics, the management team, the financial characteristics, and the valuation. The second part of the analytical process is what we call the impact analysis. And this is where we delve deeper into how a company is driving that positive change. How is it contributing to a more sustainable world for current and future generations? Now, this bit is unique to positive change and is a discipline that we've developed over the last 5 years or so. This is carried out by our impact analysts. When it comes to portfolio construction, I've discussed the team-based approach. So we've got the 4 decision makers. And for every potential holding that goes into the portfolio, we're considering both the investment potential and the potential for a company to deliver impact in determining whether a company makes it into the portfolio and what size it goes in at. Once a company is owned by the portfolio, we then, our work doesn't end there. We continue to engage with the management team, to observe the operational progress, and to also observe the progress that a company is making in delivering positive change. Now, the impact analysis and impact reporting is the relatively new bit to Baillie Gifford. We've got decades of experience of investing in growth companies, but really understanding impact is relatively new. So I'm going to delve a little bit deeper into this second objective. So how do we analyze positive change or impact? Well, Ed and Michelle and their colleagues provide an objective opinion on how a company is driving positive change by applying this 3-factor process to all companies, regardless of the change that they're delivering, whether it's improving patient lives or helping the environment. In this analysis, they're considering the positives and the negatives. It's a holistic approach, which I think is really important because, as I said earlier, there's no such thing as a perfect company. So the first factor that they consider is product impact. This is really why we own a company, for the products and services that we think are delivering that positive change. I'll use an example here, and that is Dexcom, a US business that makes continuous glucose monitoring devices for diabetic patients. It's essentially displacing the finger stick test. It's helping those patients better manage their condition, improving their quality of life, and helping reduce costs to the healthcare system. In the US, the treatment of diabetes costs just over $320 billion a year. Now, the relationship between the product and the challenge is direct here. The depth of the impact that Dexcom's products is delivering is quite significant. It's more convenient, it's less invasive, and crucially, it's helping patients keep their glucose levels in range for longer, resulting in fewer long-term complications. The breadth of impact today is that Dexcom's products are used by around about 900,000 patients. The potential is enormous. In the US alone, there are around about 30 million type 1 and type 2 diabetes patients. We'll also consider the materiality, both in the context of the company and in the context of the challenge. Now, for Dexcom, it's all about empowering patients with diabetes. In the context of the challenge, Dexcom is an important player within that overall system, which also includes insulin providers and pump manufacturers. When we're considering the product impact, we also make a linkage between the products to the UN 17 Sustainable Development Goals. These are goals that were established back in 2015 to help move us to a more inclusive and environmentally sustainable and peaceful planet. Dexcom is addressing the third of those goals, healthcare and well-being. The second factor which we'll analyse is intent. This helps us establish how committed a company is to delivering positive change. Now, we can read and hear the vision and the mission statements of companies, but what's really important is that there are actions and structures to back that up. So here I'd point to Tesla as an example. Elon Musk's vision to move us towards an electrified automotive sector is well understood. But what actions back that up? Well, I'd point to three. Firstly, the commitment to invest in R&D and manufacturing capacity to reduce the costs of their cars. Secondly, the fact that they opened up their patents, believing that it's going to take the efforts of more than one company if we were to be successful in this mission. And thirdly, it's their commitment beyond the cars themselves, but towards how you generate and store that electricity that's going to power them. The third factor considered in this analysis is business practices, and this is your more typical ESG assessment, where we're looking to understand a company's approach towards all their stakeholders, customers, employees, suppliers, and society more broadly. Alphabet is an interesting example here, because this is a company that we like for the positive change that it's delivering through providing increased access to information, an incredibly powerful democratizing force. However, when it comes to its business practices, it didn't score so well because of their approach to paying taxes. So I hope that gives you some sense of how we analyze impact. How then do we measure impact? Well, this is challenging because we're investing in companies that are delivering impact in lots of different ways, whether it's Dexcom or Tesla. There's no single metric that we can point to. Secondly, it's not always easy to measure impact. For example, how would you put a figure on improving access, the benefits of improving access to information? And then finally, even where impact is more readily measured, it's not always measured or disclosed in a consistent fashion. So for example, carbon savings. So this is hard, but we think it's really important that we do a good job of this, because it holds us accountable to that second objective, because you will want to know the impact that your capital is having. And more broadly than that, we think that doing this well will help raise the credibility and the popularity of investing this way. So we've committed to publishing a report once a year, which will provide information on every holding in the portfolio, some metrics that will help illustrate the progress that the portfolio is having in contributing towards positive change. So for example, we've got Teladoc here. This is a US provider of telemedicine. So it's providing doctor's appointments over the phone and the internet. It's got 2,400 employees who are providing GP services or mental health care or nutritional advice to over 4.1 million people, well, it was 4.1 million visits over 2019. Now, this is improving access to healthcare and also reducing the cost of healthcare. So it resulted in an average saving of just shy of $500 per medical visit. And it's helping contribute to SDG number 3, good health and well-being. The portfolio as a whole is contributing towards 13 of those 17 sustainable development goals. Now, where we can, we also aggregate the statistics, and there are 11 of these such statistics, 3 of them illustrated here. So in 2019, the companies in the portfolio helped save just under 120 million tons of CO2 emissions. They also helped provide access to financial services to just shy of 100 million people. So I've discussed the inputs. So we now discussed the inputs, so the philosophy and the process, the why and the how. I'm now going to pass back to Lee, who's going to tell you more about the portfolio itself.
Great, thanks again, Kate. So onto the portfolio, it's been encouraging to see the great starts that Positive Change had. So this is our open-ended fund as an illustration. And we will say that we want to assess performance over a much longer period, at least 5 years and 10 years or even longer. But nevertheless, the first 4 years of positive change has been a very encouraging start to provide support for our hypothesis that doing good for society and doing well financially can go hand in hand. In particular, we are pleased to see a lot of the performance that has been generated comes from underlying operational progress that companies have made in the portfolio. That includes, for example, Tesla and its ability to scale up the manufacturing of the more affordable Models 3 and grow its revenue at the same time, including, as Kate mentioned, Dexcom as well, enabling more people to access continuous glucose monitoring devices. So we are very happy to see the progress that the companies in the portfolio have made. And we are very excited about the next 5 to 10 years as well. We think some of those companies are extremely exciting, that have the tremendous potential to deliver attractive investment return and a positive impact on society. So this is just a portfolio as it is. It's split across our 4 impact themes, and we are very excited by them. Happy to take any individual questions on them as well. But yeah, maybe we should stop there and open up for a question, Rosie.
Yes, thank you both so much for that overview of Keystone Positive Change. Hopefully it gave everybody who's dialing in today a really good feel for what you're trying to achieve. We were very fortunate and received many questions in advance of today's seminar. Lee, perhaps I start off with you. You showed us the Keystone portfolio as at the end of February. We received quite a few questions about the transition. Can I ask, in the long term, are you investing in any of the previous Keystone holdings, and how far through the transition are you?
So we have made very good progress with the transition of the trust to the portfolio that we have. Many people have worked on that, and everyone's help has been greatly appreciated. We are roughly kind of 95% complete in that transition. So roughly 95% of the portfolio is in companies that we intend to hold for the long term. And there's a small bit that is still in transition that we should finish those shortly. In the long run, we do not foresee any of the holdings from the previous manager of Keystone being kept in the portfolio. So it will transition completely to the positive change mandate.
Thank you, Lee. Kate, perhaps turning to you. Received a question asking, why is there another trust in the Baillie Gifford stable? Surely investors have enough choice with existing trusts.
Well, I think firstly to say that investment trusts are very aligned with the way we invest as active long-term growth investors and providing patient capital. The Keystone Positive Change Investment Trust shares that investment philosophy with others, in that we're looking to invest in that approach that we take, that long-term active growth approach to investing. But it is quite different. And that's because of us having that second objective, which we are intent on delivering. So thinking about that second objective really starts from the idea generation through to the process itself. We're looking to manage the portfolio to deliver both attractive investment returns and impact. So that means there are no compromises. Any company that makes it into the portfolio has got to meet both objectives. We won't relinquish one for the other. And then also that commitment to providing robust reporting on both objectives, which is difficult. So there is some natural overlap, but I do believe it's genuinely different. In terms of specifics, overlap is around about 25% with the Scottish Mortgage Trust. That's where the highest overlap is. But I hope that that illustrates that what we are doing is aligned to what we've always been doing at Baillie Gifford as long-term growth investors, but at the same time, really quite different and genuinely exciting.
Thank you, Kate. Lee, if I can come back to you, during the presentation, you outlined some of the key characteristics of Keystone Positive Change. I wondered, could you just reiterate the difference between our existing Positive Change Fund that you've been managing for 4 years and the Keystone Positive Change Investment Trust? What can shareholders expect to be different?
Yeah, of course. So there are 3 key differences between the Positive Change Open-Ended Fund and the Positive Change Investment Trust. So the investment trust first is able to invest in private companies. As mentioned at the start, we think this is a hugely exciting opportunity where we can allocate primary capital directly towards companies to help them scale and grow. The second difference is the ability to invest in smaller cap, less liquid companies that are listed on the stock exchange. And then finally, the investment trust will able to allow us to employ gearing, so allow us to borrow a small amount of money against the assets, and then use that to invest in the companies we believe in. And as long as the long-term investment return is above the cost of borrowing, this should help us to enhance the return for shareholders in the trust.
Thank you, Lee. And if I may, a related question. A shareholder noticed that we can invest in up to 60 companies within the investment trust. So he was asking, is Keystone Positive Change going to own more holdings than the open-ended fund, which it currently invests in 34 companies, doesn't it?
Yes, it does. So in the long run, we do foresee that it's quite possible the investment trust will own more holdings relative to the open-ended funds. And I think the 2 opportunity in the private companies and the smaller cap companies, those companies will only be owned in the investment trust and not in the open-ended fund, and because of that, it's likely that in the long run we will own more companies in the investment trust.
Okay. Thank you. So it sounds like lots of new exciting opportunities. Kate, you talked during the presentation about the Positive Change team and the resources we have available. We received a question that is asking if you're going to add to the Positive Change team headcount now that we have an investment trust to manage.
Well, maybe just give you a sense of history here, in that the resources that are allocated to Positive Change have increased quite considerably over a relatively short period of time, because this is a resource intensive area. Having these 2 objectives and making sure that you give them equal consideration throughout that process in terms of finding the ideas and analysing them and then owning the businesses, it requires a lot of resource. So I think we're very fortunate, because 5 years ago, there were several of us working on this part-time. Today, there are 7 of us working on it full-time, and we've got the additional support from our advisors, as well as being able to harness all the fantastic idea generation that's being done by the other 120 or so investors at Baillie Gifford, because of course we share one of our objectives with them, high quality growth companies. One change is that we're now, we've got a broader investment universe now that we can include smaller and private companies. But again, it's about leveraging the significant resources that we already have. So we have been working with the private companies team on an ongoing basis whilst we've been investing just in public companies, because we believe that that provides us an advantage in being able to understand what disruptive technologies might be coming through the pipeline and how those might impact public companies, as well as giving us an eye on what might be coming up to list and into the public markets. But what we're really excited about is being able to work with them more closely as we're now able to invest in that area. So to answer your question, I think we're in a fantastically fortunate position of being so well resourced in this area of impact, both as a team ourselves and being able to leverage resources elsewhere at Baillie Gifford.
Thank you, Kate. And if I may, I'd like to explore a bit more about private companies that you mentioned. Can you give us a flavour of the types of private companies you're thinking about for the portfolio?
Yeah, so it's a really exciting time for us, and there's a huge range of different types of companies that are on our radar in that area. Whether it's companies that are developing new sustainable fibres that could help address the huge environmental impact of the fast fashion industry. So here I'd point to the likes of Ginkgo Bioworks or Bolt Threads. Companies that have got interesting financial services that are providing international money transfer at a low cost. Or companies that are helping change the mobility system in the long term. What about flying taxis, or the more technical term, eVTOLs, so electric vertical takeoff and landing vehicles? That could really transform mobility in the decades ahead and help improve the environmental angle of mobility, economics more broadly, and also general well-being. So there's a range of companies and areas that we're interested in here.
Thank you, Kate. That does sound exciting. And staying with exciting companies, Lee, we received a number of questions on Tesla, which of course is a holding now within Keystone Positive Change. Lee, could you share your thoughts on Tesla, why it merits a place in the portfolio, how you're thinking about it over the long term? I think there's a lot of curiosity from participants on the call about Tesla.
It's impossible to go through a call on positive change without talking about Tesla. And so very happy to do that. Tesla is one of the largest holding in positive change, both in the open-ended and also for the Keystone Investment Trust. We believe that Tesla is an extremely exciting business. We think that the growth of electric vehicle over the long term is a tremendous opportunity. There's a definite desire for us to replace very polluting petrol and diesel vehicles with cleaner alternative. And electric vehicle, and in particular, the progress that Tesla has made is demonstrating that electric vehicle has the potential to do that. And we believe that cost will continue to come down as a function of lower battery cost and improved scale. And in also the prospect of autonomous driving and the various benefits that you get from switching to electric drivetrain, that should be very attractive. So we think the growth opportunity is very attractive, that over the next decade or two, we could see electric vehicle taking up a substantial share of the new vehicle sales annually. We also think that the competitive advantage of Tesla is very strong, both the hardware and the software side. Also the scale that it has in manufacturing battery and the experience it has in battery management and battery technology. The software leads in the autonomous driving and the accumulation of data from real world driving experience. That could lead to increasing return to scale as it helps Tesla's software to become better at a faster pace than their competitors. So we think that Tesla has the competitive advantage that allows it to capitalize on this opportunity ahead. And on the impact side, I think there's very little arguments that a move towards electric vehicles and the greater usage of solar energy generation and battery storage in the electricity grid is a fantastic improvement from an environmental perspective.
And of course, there was a little bit of controversy with Tesla recently in terms of their decision to invest a portion of cash within Bitcoin. A few questions came in saying, actually, what are your thoughts on that, both from that investment and impact perspective?
Yeah, we're very privileged to have one of our colleagues in Baillie Gifford who has done a lot of work around Bitcoin and blockchain technology. And the environmental impact is not as clear as some of the headlines in the news paper that have been reporting, comparing emission relative to a country. It's more complicated. The way that Bitcoin mining works, it is an energy intensive process, but that gives an incentive for the miners to use the cheapest source of electricity. And in an increasing number of circumstances, that cheap electricity comes from renewable, in particular coming from wind and solar, when they are intermittent demands. When the demand is low and the supply is high, the marginal cost of solar and wind is essentially zero. So the cost is very low, and the Bitcoin miner actually uses and increasingly is using more renewable energy. So the environmental kind of impact from a purely emission perspective is not as black and white as some of the report would suggest. In addition, I think it's important to highlight that what is absolutely critical for sustainability over the long term is about transitioning our energy supply towards renewable sources, so solar, wind, etc. And energy consumption itself is something that's have been increasing throughout human history, and it's simply a function of our society being able to do more with improved standard of living and more choices. Our energy consumption goes up. And that in itself is not necessarily a bad thing. The bad thing is when that energy is coming from fossil fuel. So what is really important is to make sure that we no longer rely on fossil fuel for our energy, but use clean sources like solar and wind. And once again, the role that Tesla play here is enormous, both through the solar energy generation through its products, and increasingly through energy storage, the battery storage, which is used in the electricity grid. So we think that Tesla plays a tremendous role in terms of shifting our energy system from one that is not sustainable to one that is sustainable.
Thank you, Lee. Kate, moving on from Tesla, but staying on the portfolio, a few people have asked about emerging markets and in particular China, and have asked, are we likely to see Keystone's exposure increase in these regions over the coming years?
Of course. Well, when the transition is completed, we'd estimate around 15 to 20% of the portfolio being held in emerging market companies. And that's in a range of companies from an Indonesian bank to Safaricom, which Lee has mentioned, which is a Kenyan provider of mobile telephony and payment systems, to an e-commerce business in Latin America, Mercado Libre, and an e-commerce business in China, Alibaba. So Alibaba is China's largest e-commerce provider, and we believe that that provides a great growth runway for the company as e-commerce increases, but also the potential to deliver positive change, because it's really reducing the friction for small and medium-sized businesses who are really important in contributing to economic growth and enabling social mobility. It's also contributing significantly to China's digitalization, and also provides a lot of financial services, which are helping more people participate in that real economy. Now, I think that the area emerging markets, including China, should be a really exciting opportunity for us, both in terms of identifying growth companies, but also in identifying companies that can deliver that positive change, because poverty levels in these regions may have reduced, but there's still a lot of inequality, which we think can be addressed through the power of innovative companies. So it's a region that we are excited about, and there are a number of companies that we're currently looking at and exploring, which could well be contenders, whether it is African e-commerce businesses or Indian microfinance businesses.
Thank you, Kate. So it sounds we should very much watch this space in terms of emerging market allocation. Now, understandably, we've received a number of questions about the recent unsettled equity markets. So perhaps, Lee, if I turn to you to ask, actually, how are you thinking about the portfolio against such factors such as rising bond yields and stock market volatility? How's that playing into your process at the moment?
Yeah, I think one of the great privilege to work in Baillie Gifford is the partnership structure really help us to kind of being able to not be distracted by those short-term market volatility. Our focus is over the next 5 to 10 years, and the focus is always around identifying great growth businesses that are having a positive impact, that are driving change in society. So we are continue to focus on the long term, to focus on the business from a bottom-up perspective. Every so often we do discuss things like interest rate and bond yields in our portfolio review meeting, but that is much more just to think about the long-term opportunity rather than whether we should change any of our portfolio holdings because there's been a 2-week volatility due to changes in inflation expectation, for example. So volatility over the short term should be expected, and it's likely to continue. But our focus is always on the long term of those businesses that we invest in.
Thank you, Lee. Now, I'm conscious of time. I think we have time for one final question. And I think in keeping with the philosophy of positive change, I'd like to finish on a note of optimism. So perhaps I can come to both of you and ask, what are you currently working on that excites you? Kate, will I come to you? Or Kate, can I come to you first, please?
Yeah, of course. This is an incredibly exciting time in terms of ideas that are that we're discovering and researching. And I truly believe that what we do is a privilege as investment analysts, being able to research and meet with interesting companies. And the variety is huge. So specifically, for example, this week, I'm looking forward to a call with the Dexcom management team later on in the week to try and explore how they might unlock the next cohorts of patients. So I mentioned those 30 million patients who's in the US alone who suffer from type 1 or type 2 diabetes. But what about the 84 million patients in the US who are pre-diabetes? Now just think about the benefits of a continuous glucose monitor device, which could help those pre-diabetic patients make better lifestyle choices and prevent the onset of the disease. Prevention would be fantastic. So I'm looking forward to finding out more about an existing holding. Also doing some work on some secondhand clothing platforms. Done a bit of work on the fast fashion industry, which unearthed and surprised me in terms of how environmentally impactful it is in terms of emissions and water consumption. A statistic that really struck me was that I think it takes the equivalent of the drinking water of a person of 2.5 years to make just a single white t-shirt. That's before you've thought about dyeing it, which is also very water consumptive. So we really want to move from a linear system there to a circular system where we're keeping things in the system for longer, making clothes from different materials that are more sustainable, using clothes for longer, reselling them and keeping them in that system. So I'm really excited about the companies that are coming to the markets there. And also, as I mentioned, there's the synthetic, the more sustainable fibres through the likes of Bolt Feds or Ginkgo Bioworks. So I just think it's a hugely exciting time, whether we're discussing new paradigms in medicine from messenger RNA technologies with Moderna to thinking about connecting more people through satellites in space. I mean, it really is fascinating and hugely exciting, and there really is huge scope for optimism, I would say.
Lee, do you share Kate's excitement? Are you similarly optimistic?
Definitely. So yeah, it's tremendously exciting time to be just alive, and so fortunate to have the job that we do in terms of looking at those very interesting innovations. In terms of what I'm working on, an area that I'm working on is on education. So thinking about how digital technology can improve education, and in particular in a world with more automation and where jobs are changing faster and new jobs being created, old jobs being displaced. How do we make sure people have the right skill to participate in the economy? So this is a very interesting area to be researching, and also continuing the work around the sustainability of food and agriculture. That is very exciting, and thinking about alternative protein, indoor vertical farming. There's a lot of interesting businesses out there that are driving a positive change.
Thank you, Lee. And so thank you, Lee and Kate, both very much for your time this afternoon. And most importantly, thank you to everyone who took the time to dial in to listen to us and who submitted such thoughtful and interesting questions. Hopefully we've provided a good overview of Keystone Positive Change, and we've inspired you to think about the impact that your capital can have whilst you're generating attractive investment returns. We very much look forward to continuing the conversation with you in future. Thank you and goodbye.